Welcome to Vol Stars, where we talk everything markets and those who make them. Today's episode is brought to you by Standard & Poor's, Depository Receipts, and the Gold Shares ETF, GLD. Hey you, looky, shiny. Do you like shiny thing? Come get shiny thing. You could make it into a ring for someone you are sexually attracted to. If they also like shiny things, make it a crown, make it a throne. You can drink it. You can cover your Corinthian pillars with it. You can look at it all day long. Do you experience existential dread about the decaying value of your previous labor? Get GLD. It's not even the shiny thing you want. It's a piece of paper that is good for the shiny thing you want. Wink. Get GLD today through your favorite broker and now at the hot dog kiosk in your local Costco today. And finally, by GammaStrike.com, providing actionable real-time data for every type of trader. You've tried the rest, now try the best, GammaStrike.com. I'm Jay Fresh, and I'm joined by our co-hosts, Gherkin and Dork. Let's get into the market overview.
I think it's interesting that iShares left out touching your daughter with your GLD shares would turn her into a statue, and that you could also bash your sexual opponents over the head with your pieces of GLD.
I feel like bronze would probably be.
It's not as dense though. I mean, you know, if you're thinking like a blackjack, gold's close to lead. You know.
I mean, but in terms of reach, right? If you want your blackjack to have enough length, right, you need to be less dense to get the
more
speed.
GLD. I'm not. What do you like? You can't. Are you saying if you make it too long, it'll bend?
Well, but then you don't know. Well, if you make it too long without enough girth, right? Like it's just not going to be, very ergonomic for bashing.
I see. I thought you could just use like a clump. I didn't really think.
Up close and personal with your GLD.
Yeah, what kind of weird mugging are you involved in where you're just like trying to poke people with poles from a distance?
Fucking jousting his mugger on the subway.
It's like a cue stick, just doink.
Golden Shaft subway jousting. Okay, that's where your head's at. I was like, where is this going? And then it all made sense when you're jousting people with rods of gold in the New York.
That's what me and Dork do on the weekends. We ride on the tops of trains in India and fight each other with gold lances.
Haven't hit each other yet. They're just too fast. And we're too drunk.
You have to keep ducking for all the tunnels. It's a very dramatic sport, if nothing else.
How many people have you accidentally killed? Like 300? You just like decapitated and knocked off the train?
Me and Dork
everyone
are
who's just watching
for at least 700 Indian train videos on gore.com.
They're trying to catch the actual like moment. And then they make the mistakes. It's not.
Yeah, everyone's like all those videos of people filming things, and then they get hit by a train in India. They're filming me and Dork.
Oh, okay. Ron, have we lost all of our viewers yet? We're
probably
down to 0 now. Okay, great. Okay. Now that we're down to 0 viewers, let's talk about geopolitical tensions a little bit. So, what the hell is going on? I would just like to say that last week when I was making fun of the whole tariff threat that he would say it's going to happen in 2 weeks and he would taco the next day. That's basically exactly what happened.
Yeah.
I think we were mostly in agreement.
Are we at full taco? Or
well, here's the interesting thing is Trump,
he'll untaco, but then he'll taco again.
Trump went into a meeting with Mark Rutte, the SecGen of NATO, and then walked out of the meeting declaring himself the victor, and the prize was a 1951 treaty that the U.S. already had in place with Denmark that allows us to build as many military bases and deploy as many forces to select areas of Greenland as we see fit in order to ensure Arctic Circle defense. However,
nothing ever happens.
Yeah, nothing ever happens. So, and then I mean, kind of the weird thing, I guess, about that meeting was that Mr. Ratz has no power over the sovereignty of Denmark, nor can he negotiate on their behalf. Yet, somehow Trump won, and it's
Okay.
the art of the deal. You know,
So it sounds like we all won.
We all didn't lose.
Yeah,
Yes, there you go.
we didn't lose.
We all got what we wanted, which was to pretend none of that ever happened.
Yep.
And so, yeah, a lot of saber rattling into nothing. However, none of the terms of Trump's new deal, that's exactly the same as the old deal, have been disclosed. And so the market maybe doesn't fully buy that anything's actually happened, or at least that the things that were promised have happened. And so we're definitely in a situation like we were with China back in 2025, where we don't really know what's coming next because the information we're being fed is bullshit.
Speaking of the information we're being fed being bullshit, we can come back to the geopolitical tensions if we need to, but I would like to transition at this point to the government shutdown that could be looming.
Inevitable government
again,
shutdown?
which will once again throw us back into darkness just when everybody felt like, hey, we're starting to get information that's not half empty.
Well, actually, the interesting thing about this one is appropriations are now approved, right? So no more counter leverage with SNAP benefits or school lunches or things like that. And this is also the debt ceiling, which, if we exceed it, can cause some fairly serious market problems. Now, admittedly, government shutdowns during the debt ceiling negotiations are more rare than government shutdowns during appropriations. However, there is a significant amount of political backing to cut funding for Department of Homeland Security. The Democrats seem to be seizing control of that recent surge of interest in removing funding from that particular agency. And Schumer said that they are not passing any bill in the Senate as of today, I believe, that contains a funding provision for the Department of Homeland Security. And so the market odds of a government shutdown went from about 15% to about 75% today. Big jump. I thought, with the way the last shutdown was kind of surrendered, obviously we were going to see another shutdown. I think we actually talked about it at the time, and we were pretty much all in agreement that the Dems were just going to shut this all back down again the next chance they got, and this is that chance.
So hold on, so I think the first thing we should point out is the point that you made, which was the last time it was shut down, it was for discussions about appropriations. I mean, the U.S. government hasn't passed a budget since, I was in high school, I think is what's his face said.
Bill Clinton.
Yeah, but I'm trying to remember who's the guy who had the young boy friend from Florida. The Republican.
That's all of them.
Anyway, I'm not going to remember his name, but he has since left.
Wait, hold on. We have a producer for a reason. Ron, can you search Republicans on Grindr?
Not Ron Paul.
No, not Ron.
No.
This Ron. Ron, our producer,
no.
not Ron Paul. Are you listening to me? Ron, I need you to search Republicans on Grindr, please.
No. Not Lindsey.
You're gonna find too many. Don't. Let's. That's not gonna narrow it down, Gherk.
No, I'm out of ideas.
Anyway,
I haven't even tried.
Oh my God, what is this asshole's name? I'm blanking. But anyway, I mean, he made that statement a while back that, hey, we haven't passed a budget since I was in high school. But anyway, so we haven't passed a budget in a really long time. So what we do every year is we just kind of punt and say, okay, well, we'll pass some appropriations. We'll just fund these things, and never actually like approve like a budget where you make sure that you're not spending more than you're bringing in and things like that. And so that was what the last shutdown was over, was appropriations. And so what ended up breaking that fight was the Republican side said, okay, well, we're going to just defund, feeding poor people. And that got enough of them to, flip to say, well, we should probably feed poor people to go through that. But now all those are passed. So this one is the weird feature of the United States law is that we have a debt ceiling that we have to keep raising, right? No other country really has this, but we have to keep manually raising the debt ceiling. And because we never pass budgets, we keep always running up into the debt ceiling. And so that's what this fight is about, is simply, are we going to get enough votes to just raise the debt ceiling so that we can spend the money that we've already appropriated? And so it sounds like specifically that they want. So this is what I don't understand, just because I haven't dug too deeply into it. How? Yes, yeah. So how does this prevent the Department of Homeland Security from being funded? Were they not included in the last appropriations? Are there still some appropriations outstanding that need to be finished?
Probably. I mean, the last resolution we had was primarily for SNAP and DHS. Sorry, I'm not sure. I'm not entirely sure.
So this is a problem for the Dems, right? Because nobody really understands exactly what they're after and what their strategy is and what their leverage is.
Well, if we get
Which-
another extended shutdown, this one can be, catastrophic because you have debt ceiling default risk.
Yeah,
Treasury,
but they'll
Treasury
do
can't borrow
exactly
above the debt ceiling. I mean, we have
right,
some
but they can
backstops,
but they can do the same thing that they did last time, which was, extraordinary measures. They can basically drain the TGA.
yeah, we had to do that before, but you still have an X date.
Yeah,
and that's a variable.
And that X date tends to be months, right? And so,
sometimes depends on the status of the TGA going into the
what is
into
the
the
TGA
shutdown
at right now? It's probably, is it still around 800? Did they get it back up? I'm just going to go to the daily treasury statement. Let's see where we are at. 871.
It's not bad.
Okay,
it's a good balance.
That's pretty good. That's pretty high, actually. Yeah. So
and you have a
months of runway.
Yeah, you also have a tax season, so we've got a fairly consistent amount of money that should be coming into the TGA as well, without additional bond auctions.
So game this out a little bit. The public probably is going to have a hard time understanding what the strategy is here. It's definitely not as straightforward as the last one. And they probably have plenty of room to let this linger.
the problem is that every government shutdown risks distorting economic data, right? So you have federal employees. We have a lot of them now. When they don't get a paycheck, they have to cut back on spending, right? So, and this is the problem with trying to game funding, is that at this point, I mean, regardless of your feelings of how we got here, there's a lot of people collecting a paycheck from the federal government And when that paycheck is no longer there because of a government shutdown, their spending habits change. And so a prolonged shutdown, like the last one we had, even you could say distorted the economic data just to a small enough, but a appreciable degree. So doing that again, and then potentially doing it again and again, you're going to start seeing spending habits that were once transitory start to become permanent. Where as a government employee, you don't know if you're about to get another shutdown and have your paycheck, on hold. And
Yeah,
sure, maybe they were made whole, but like it's still it changes your spending habits, like as a person.
Yeah, I'll just say because this has been evolving so quickly. So currently, according to Reuters, where we stand now, 6 of the 12 annual spending bills for the current budget year have been signed into law. That was from the last fight. 6 more are awaiting action in the Senate. One of them is a funding bill for the Department of Homeland Security, which is what they are fighting against. And if it says if senators fail to act by midnight Friday, funding for Homeland Security and the other agencies covered under the 6 bills will lapse.
Oof.
So, as far as like a government, this is going to be, I think, a much less clear. The battle's going to be less clear to understand like what everybody's fighting for, and I think just the messaging is going to be really difficult because half of the bills have already been passed for this year. So it's not going to be like an entire government shutdown. It's going to be a targeted one. And I would have to dig and see what things haven't been funded yet.
Well,
So I don't
DHS
know.
includes TSA, by the way.
No, I think that's true. Yeah.
Yeah, isn't the TSA? Oh,
It's
okay,
DHS.
TSA. Yeah,
Yeah, so that
I
like
was thinking air traffic control for some reason.
I don't know much, but I know that there's a lot of people employed by the TSA.
Yeah,
I honestly, when it comes to these shutdowns and stuff, like in terms of political theater, I get it, what you're trying to do, but like in terms of people, these are just people who have a job and they do their job and they're just people, right? Like imagine you worked at, I don't know, some store or something. And then at some point it's like, hey, the CEO got into an argument. And so you're not getting your paycheck until I don't know when.
we're not there yet.
We're getting there. But that's what I'm saying.
They're not very productive, that's for sure. I think we can all agree on that. And it does signal obviously much bigger structural problems that we're even getting to this point and getting to it on a regular basis.
And we talked about this for years. We've talked about this for years, where the government, like these cycles of these shutdowns and the debt would just increase and speed up and get more and more like voluminous. It's happening.
Well, I mean, I would say that the political rift in the U.S. has become more and more pronounced.
Yeah, this is
well,
a
sure,
slower
but
trend
chicken egg. Right?
Yeah, but I mean, the fighting over the budget, I mean, that's been happening since way before it was anywhere close to as bad as it is now. And I think politically, it's almost gotten to a point where that itself has also become nothing more than a political token. They feel like it is not really an actual issue that needs to be solved. It's just something that should be gamed and should be messaged around and strategized around. Which is in and of itself is also a problem because eventually one day it will cause an issue, much like it is happening now in Japan.
It's already causing issues, yeah. Like it is.
Well, because right now we're what, 120, 140% of our GDP
Yeah.
is debt.
Yeah. Yeah. We're getting to the point where the interest payments are starting to outweigh everything else. Like it's happening.
Yeah, I mean, we are growing our deficit by around 2 trillion a year, and the money supply is only growing by around 800 billion a year, and a lot of that is private right now through banks and like the AI boom.
Yeah. It's stupid. That's the great financial circle jerk, right? That we spurned let's just give a date of 2008, 2009. It's starting to reach a head now. I mean, it all started obviously with the Greenspan Fed put sort of advent, but it's starting to reach a point now where the whole idea that you can grow out of debt is starting to become a dead theory. Like, and this is kind of what I anticipated happening back in 2021 when they did it, and the huge, like, so there was 2020, right? Obviously, we shut down a bunch of businesses. We got to give them money, and then 2021 we decided, you know what, we're gonna, now that we got vaccines coming and everything, we're gonna do it again, just to really kind of just rocket out of into a recovery, right? And right then and there, I was like, if we try to sustain this fiscal path, which we did all through 2024, and we're seeming to continue to 25, it just seems like we're reaching this head now where we're in so much debt that trying to grow our way out of it without inflating our way out of it is impossible.
So I'm glad you brought up inflation, because I would like to talk about that for a little bit in just a moment. But I will say, I want to make a slightly different nuanced point to this, is that yes, the debt is growing faster than, the economy, and massive growth. This is why I was always kind of saying, since AI came on the scene, that it was always a hype of desperation, because we needed some ultra growth path to allow us to continue ignoring our debt problem. Because if we're going to have hyper growth, like real hyper growth in productivity, then the debt isn't an issue. And so I think everybody kind of latched on that just as a coping mechanism.
Copium? Yeah.
Sure. I don't want to make people upset by saying copium, but I think there was an aspect there of, wishful thinking, positivity, all of those things that are fine and good, and usually how progress is ultimately made. But on the flip side of that, I think the thing that to me is the real problem is that you have politicians who serve 2-year terms or 6-year terms, and now this quote unquote growing debt problem has gone on for so long that it is significantly longer than any one given term. And so now anytime somebody comes into office, they might think, okay, it's a problem that needs to be solved theoretically in the future at some point, but I don't have to solve it now, but I can use it as a political token, because it's not going to blow up, because nothing ever happens. And I think that's the problem, is that I think deep down there is some anxiety socially, because it does appear that the political system has completely given up on even trying to solve it, because it is not today's problem, it's tomorrow's problem.
Well, it's because solving it requires immense pain now, and that pain only grows until one of two things happens. Either there's a reckoning where you're forced to endure the pain, or there's a decision, an active decision to actually try to manage it, right? Like that we're that's what we're heading towards. I mean, it's that's really, like, it comes down to that. And what we're doing is we're just saying, you know what, instead of either, we're going to say, yeah, that's a problem. I mean, it's kind of like finding a lump on your testicle, right? You're like,
Hmm.
it's a pretty small lump.
Dork,
I'm gonna
Hold
go to the
on.
doctor later.
Hold on. Dork, I'm going to stop you right there. How many lumps have you found on your testicles?
I'm only at a baker's dozen that
That's
I
a
can
lot of
count.
lumps.
It's hard to palpitate enough to find all the lumps. Look, like, going to a doctor costs me like $200, dude. What do you want me to do?
My wife. So veterinarians love the word palpate. It's palpate. Palpitate is when your heart is quickening.
Oh, sorry. I
Yeah.
palpated the lumps. I can't palpate. I'm starting to run out of, like, it just feels like knurling on like a grip, Starting to feel like that on my testicles. But a doctor's appointment is $200. What do you want me to do?
Go to the doctor.
That's $200, dude. What do you expect? Coffee's like $25. What do you expect me
Well,
to
I
do?
hope you don't want kids, or I guess you don't have to worry about retirement. So there's that.
Until it hits my pancreas, I'm okay, right?
Sure. Yeah. All right, so let's get back on track. So we've been talking about the government shutdown and the budget concerns and how it's a long term thing, and that the choices basically are pain or inflation. I've been starting to talk about and seeing a lot of similarities between the inflation we saw in 2020, 2021, 2022, and right now. Because I almost kind of forgot because it is so similar. It's shocking, and if you actually sit and think about it, back in 2020, 2021, we were all shut down, and so what did everybody have to do? They all had to get online. They all had to do their jobs remotely. Everybody needed to buy electronics, and so laptops were in high supply, or were in high demand. All of the components for all of these things were in high demand, and so the price of semiconductors went through the roof, and semiconductor goods, right? That was, in that case, driven by consumer demand, who were all no longer spending so much money on gas and other things. They were all still working and needed to buy all this equipment, and so we actually ended up having shortages of chips that go into cars and chips that go into various places, and it caused a significant amount of inflation everywhere because chips are kind of in everything, right? Fast forward to today, and now we're seeing the exact same thing happening, but it's now being driven by industrial side buying all of this stuff and leaving consumers behind. And so in that way, it is much more insidious because
Insidious?
what did I say?
Insidious.
We're all just screwing up our grammar here.
Palpate, insidious,
Insidious, whatever.
potato, who cares?
Yeah, right. Potato, tomato, right? Same thing. And so you have the situation where RAM prices, SSDs, all these components are going up 100% every quarter almost now. What do you guys think? Is that going to cause issues? Are we just going to
Gee, so let me bring this full circle back to my coffee prices. Do you think the people who manage the buying and selling of the coffee that goes in the bag that then gets driven to the place where I go to pick it up, do you think they use computers?
No.
I think they do. I think they use computers for some of this work, right? To email a person to say, hey, I need, 6 extra pallets of coffee. They need a computer for that. And the last one they got was in 2020. And that one is now 5 years old. And now they need the newest, greatest thing that is AI enabled or whatever.
No, they're actually all trying to get the last version that doesn't have AI to try to save money.
Whatever they're trying to get, it's got chips, it's got RAM, it's got all the things AI loves. And so they still have to get people computers. Okay. Let's say you're Microsoft and you hired a new engineer. He's going to be traveling sometimes, right? You get him a laptop, all right? You're still Microsoft, but you still source it from somewhere, right? Let's say you're, I don't know, some sort of sales company that needs to get a guy a laptop because he's traveling a lot and he's also using it to email people. Every single company that has people who do work that requires just even some modicum of interaction with computers, they have to upgrade those things. So the prices on everything is going to go up because everything is digitized, and pretty much everybody uses these things. Even the smartphones that the people in the warehouses who palletize dog food, those things are smartphones with a barcode scanner on them. They're still buying silicon.
Well,
the
I was
people
just
in the warehouse
smartphones in
palletize the
general.
dog phone. Yeah.
Yeah, I would say smartphones in general, right? You need a smartphone at this point almost just to participate in society.
It doesn't even matter about society. Even just people
Everybody
who are
needs a
running
smartphone.
Amazon trucks or people who are doing Uber. Anybody, they need silicon to do their job.
Yeah. So I think this is going to be a problem, and this is yes, it looks a little bit different than the last time, but it is basically exactly the same. It is demand driven. Where last time you just had people who, the whole supply side thing from COVID was always bullshit to me. It didn't make sense. The primary thing that solidified it for me was that um, profit margins at companies went up first before everything else.
Mm-hmm.
Cannot be true in a supply. If it was a supply crunch, right, they would be having trouble, paying for things, which would cause their margins to go down to put into their products to sell, right? And so in a supply crunch, you'd expect margins to get squeezed, but they went
Yeah.
up first because it was demand push because we printed 40% of all the fucking money in 9 months or whatever it was. But now we're back in a situation where, yes, the Fed's not necessarily printing, although they are technically maybe printing a little bit right now. That's not an argument I really want to get into. But, the banks and everybody are printing a lot of money by giving out credit, primarily a lot of this credit going to non-bank financial institutions to do AI and other, who knows what else they're doing. But anyway, risk on, right, is causing this issue. Is this going to be so? How is this going to factor in? You think? You think that inflation's going higher from here? We've had zero improvement over the last year on inflation. Do we think that? Which way do we think it's going? I mean, I know that the Fed decision's coming up soon, and everyone kind of thinks they're going to hold flat.
Yeah. Interestingly, a lot of people are really still hung up on the 2 cuts for 2026 outlook. But JPM came out and signaled that they expect no cuts in 2026 and a hike in 2027. Growth in the Q3 was estimated at 4.3% in the final revision for the GDP. Yet CPI is coming in the Goldilocks zones. However, if you look at the statistical measurements of core inflation, those look like they've bottomed. And they bottomed 5 months ago. So I'm wondering, if we're seeing if we're really just seeing, a lot of the effective impartial data on those CPI reports and the incompleteness following the prior government shutdown of those reports, rather than seeing what inflation looks like right now, because it doesn't add up, right? Inflation doesn't go down while growth moves up to stratospheric levels. And then, analysts are predicting 5% GDP growth for 2026. And JFresh is right. We already are seeing demand driven inflation in sectors due to this AI infrastructure rollout, where we've seen the price of memory modules move up 1,000% in the last couple of months. And that has knock-on effects, right? That's going to start, that started moving SSD prices up. And then, the you get memory and SSD going up, and you guys are right. Yeah, it's going to hit cell phones. It's going to hit cars. It's going to hit.
It's second order. It's everything's second order.
The knock-on effects from the inflation due to the, craze to build AI data centers that we don't need is, I mean, it's kind of the beautiful thing about capitalism, in that no one thing can ever be how do I put this? It's I want to kind of try to simplify the idea.
Everything's connected, bro.
No, it's just that, if
everything's distributed in capitalism, right? You can't have so much concentration in a few things because everybody has their own projects and things.
If the demand for something is infinite, then the cost for that thing becomes infinite. And so I mean, like, this idea that 7 monopolies can come together and completely rework the fundamental nature of our economy by shifting our labor force onto H200 chips is, I mean, it's self-defeating. Not only in the idea that they couldn't fund it previously, but they absolutely can't fund the price increases driven by all of the artificial demand they've created.
Yeah, you're touching on a good point of the fact that supply is much more inelastic than the demand for these pieces.
Yes.
And so, yeah, like
I was trying to
I
avoid
think
using elasticity as a term because it is confusing for people.
Because then Dork's going to talk about how hard his rod is again.
Yeah, Jesus
Yeah,
Christ.
the
His
girth,
his
too, is just-
yeah, how girthy and bendy his gold rod is.
No, but like I mean, but that's definitely so that's the thing, is that because supply is fairly inelastic, that's why we're seeing this price increase that's just going through the roof. You know, it's that we haven't built a ton of silicon extraction and refinement and growing the crystals and all this crazy shit to match this demand, and that's not going to happen for a long time. So like, the thing is that there's this, it's a huge bet, right? It's just a game of chicken almost, where the whole idea, right, and everyone's latched onto it, at least financially, right? I don't know about actually like psychologically, but financially, everyone's latched onto this idea that if we get AI that is good enough, it will solve all of our problems, right?
Mhm.
That's
Yeah.
the whole idea. And once that doesn't pan out, because this demand, which is so elastic while supply is so inelastic, right? Once that demand goes down, the price just goes right back down to where it was. I mean, but until then, we're dealing with, yes, the second order inflation effects, and it's everything. It is literally everything, right? It is silicon flows through our veins at this point.
So I mean,
So,
I guess let's talk about that a little bit too, because like I mean, I don't know, 10 episodes now ago or so, I brought up Micron as, like, you know, Micron is going to be a company where this, you know, gets hit by this demand on this inelastic supply. And Micron's up, you know, 280 something percent since then. So what's the next thing that gets hit, right? Like, we got memory, we've got SSDs.
3M, like Jay Fresh said back in 2023.
What
Yeah, I
happened to
mean,
them?
materials
Hold on, they
materials are
just
up
had
9% year to date, which actually
Shit.
which actually is
crazy.
maybe more telling about inflation than it is about anything else. Materials and energy are up 9% year to date, which is significantly more than the S&P's 1% price improvement since the start of the year. And I feel like that sector rotation very specifically, in small caps, energy, value, like, these are all preparatory for much higher inflation expectations.
Oh yeah, it's the things that flow through our veins these days: silicon, oil, and porn. Okay.
Well,
Mm.
we haven't figured out how to commoditize porn yet. Not
Yes,
effectively.
we have.
Yeah,
Mm.
I don't know.
It's just one company.
Yeah, and they're Canadian, so are they even real?
It's true.
Yeah. All right.
No, it's interesting. It's an interesting topic.
So
I think you're right.
Well, maybe the thing is big investors are already moving towards some inflation protection. We see the growth marking higher inflation, and
Well, I think
we
what
see
they're seeing is that
the drivers. More importantly than anything, I think we see the drivers of where that inflation is very specifically going to come from, and then how it is going to reverberate out as that supply crunch turns into a supply shock.
Well, I think I think from a financial perspective, what they're really looking at is probably more so margin contraction in these AI products, but what they're seeing is margin expansion in the producers of the inputs to make the AI products, which would make sense, right? Yeah. The guy who sells the hard drives is making way more money than the guy who's using the hard drive to make the 9,000 IQ anime waifu chatbot that gives you terrible suggestions for your code that you're vibe coding in your app with a ton of security risks, right? Like that guy making the hard drives is making way more money. The guy who's making the energy to power the data center is making way more money than the data center is making these negative margin chatbots that once again give you unreliable
Well,
results for a
the
lot of your
data
things.
center is making money too. It's all about the shovels, right?
The
No.
data center's
The data
not making
centers
the
are
money
not-
though.
No, I'm
They're
gonna
not
push
making
back. Yeah.
money.
The
No
data
way.
I
centers
mean,
are-
isn't there
so
space just
here-
leased to flat rates? Like, I mean, assuming
I'm
that
talking
the
about the sorry.
demand-
When I say data center, I mean the people making software that gives people bad advice.
Oh, okay.
And
No. But
that,
even folks like CoreWeave and Lambda and those folks, they're all losing money too.
who's Lambda again?
Lambda Labs,
probably
it's just like a
another,
CoreWeave
cloud,
knockoff.
AI
Yeah.
cloud
It's just
service.
they call them the neo clouds, right? The
Yeah.
new clouds that come in just to do AI at scale.
Debt-riddled, debt-funded, money-burning machines.
They're also losing money because they can't charge OpenAI and Anthropic anymore because those people are losing too much money. So they have to try to charge them just enough to keep the lights on while they try to make just enough to keep the lights on and fill the gap with investor money. No, here's the simplest way to view the AI economy. Everybody downstream from NVIDIA loses a shitload of money, and everybody upstream of NVIDIA makes a shit ton of money.
Yeah, that sounds about right.
Yeah.
Yep.
Pretty simple. Any other domestic concerns around? I mean, I don't know. I feel like the government shutdown is a potential issue soon, but it's going to be more muted, I think, because half the government's already funded and the messaging is more difficult and they have time, right? They have time on their side, so they can let it bleed without too much pain. So as far as like trading on that, is it going to be the thing that like scares everybody out? I doubt it.
I don't know. Are you a bond vigilante or not?
As if by bond vigilante, would that include people who just don't want to buy bonds at these dog shit rates?
I think that there's a trade to be made short bonds if another government shutdown happens and extraordinary measures are taken. There's an argument for a short bond trade. But I mean, other than that, yeah, like there's like in terms of S&P and these things people like to trade, I'm not exactly sure if it's gonna get their rocks off, right? But even TLT doesn't necessarily make me super excited, right? Like about some sort of a bond move, but there is a trade there somewhere.
I actually kind of disagree with you, and for all the same reasons, me and you were excited about being long gold, in 2023. I think now we're approaching the point where the opposite trade is the advantageous one, where yields rise. And then those hedges by central banks against the US dollar start to materialize, and they close them and take their profits out of gold and start buying back into bonds. Because I mean that's what everyone's waiting for at the top end, right? Is they're waiting for yields to be at parity. And if yields hit 6 or 7%, I think gold tanks. But
if yields hit 6 or 7%, gold isn't the only thing that tanks.
That's
Yes,
fair.
correct.
That's fair. But I think that's where we're getting, and I think we're getting there. Actually, I think we have a bunch of different catalysts that are just kind of sitting there, but are more than likely to be triggered at some point in the next couple of years.
So okay. So I think we're touching on something that kind of hits a broader scope, right? When we talk about yields and we talk about the price of gold and all this stuff, I think that there's a broader picture than just domestic shit going on. The government shutdown and all that, honestly, kind of peanuts compared to the whole leviathan that is our global financial system, the euro dollar, the petrodollar, all these things and how they interact. Like, but I see what you're saying. I see there would be a lot of that effect going in where people would buy back in because the yields be too good, especially if faith in the USD was still canon. I think you're right. I don't disagree.
But as far as global goes, you're right. But there's all of these other sovereign debt structures that are also at too low yields, like Japan.
Japan's yields are rocketing, though. I mean,
Right.
their 40-year bond hit a new all-time high at like 4%. They're 30 years up, 20, 10. Their yields are just climbing. And the weirdest thing is, with almost no appreciation in the yen until we saw some intervention, possibly, or like, well, the New York Fed made a call to check on exchange rates for the yen, which is now prompting a market narrative that the Fed is going to step in and buy up yen alongside the JGB.
I have a question, Gherk.
BOJ.
I have a question. Is the carry trade short squeezing?
So I think, obviously, something I track.
Or just squeezing?
Something I track since 2022 has been like the leverage in the long and short end of that trade. And back in 2025 or 2024, August of 2024, the bank moved away from their historically negative rate. They stopped bond repurchases and they shocked the market, and the short end blew up. Market U.S. equities tanked, U.S. yields rose, yen rose pretty dramatically, and we saw like the biggest shock since SVB, and that smoothed out. The bank froze, the Fed stepped in and navigated their way through that, and we were able to stabilize. But leverage at the long end of that trade has remained elevated. I think last week hitting like all-time highs again. It's just been constantly hitting.
That's what I mean about the squeeze. That's what I'm asking. That's why I asked that. Is
so it tapped like 10.5x, which is, I mean, insane, obviously. And up until now, the carry trade since like April of 2025, since the bottom, has outperformed the S&P 500, which had absurd gains, right?
So, okay, hold on. I'm going to stop you here. What is the carry trade one more time, just for folks who...
So basically, I mean, at its most simple, the carry trade is it's a pair trade between the US dollar and the Japanese yen, where you long the dollar and short the yen, and this produces a net credit. You can then use that credit to buy. Basically, you get a bunch of yen for your dollars, and you take that yen and you use margin on that yen, and you go buy U.S. Treasuries, which are yielding a significantly higher rate. And then you just hold that, and you keep longing the dollar and shorting the yen, and longing the dollar and shorting the yen. And historically, this is considered a very, very safe way to make yield, because for the last 30 years, Japan has had 0 to negative interest rates. And so you can you can get you're borrowing money at 0%, leveraging it up, and then using it to buy financial instruments that yield 5% or 4%.
Well, right, but so just to clarify too, so like you borrow yen, let's just say you borrow the yen at 0.5%, right? The whole idea is some guy wants to get a mortgage.
Mm-hmm.
So you borrow, so what you do is you go, okay, you want to get this mortgage, so what I'm going to do is I'm going to borrow this yen, right, at this 0.5%. I'm going to use this yen, I'm going to buy dollars with it, Okay, I'm going to use those dollars then to finance your mortgage, right, and receive the yield on that. Generally speaking, that's how you lend with it. Or you could just buy treasuries if you have a bunch of deposits. I got a bunch of deposits. I'm going to take those deposits and
Margin 'em.
collateralize them to borrow yen, use it to buy dollars, which I then use. So the biggest risk in this whole thing is the foreign exchange rate between the yen and the dollar,
Yes.
right?
Yes.
Yeah, like
And as long as the
that's your biggest
spread
risk.
between those two things remains wide, so yen stays
Or
down.
consistent, right?
Yeah. Or and the
So
dollar
how
stays
is
up.
it that the rates are going up in Japan, but the yen is staying in parity with the dollar?
Well, I mean, you have a
AI
obvious.
boom.
Well, no, I mean, you have every US lender and bank and financial institution and portfolio manager of note in this trade. So huge amounts of money, huge amounts of
G-SIBs.
leverage. And I mean, every portfolio in the world is built on the back of this idea that Japan's interest rates are negative. And Japan has been working to, over the last year or so, working to try to normalize their rate and come in line with the rest of the world's central banks, all of whom are, 2% or higher right now, for the most part, with the exception of some non, G20 countries, but who cares? And so as they normalize their rate, this fundamental idea that you can borrow in Japan, leverage up, and lend in the US, it starts to fall apart and it starts to collapse. But the thing about this is, like any basis trade or carry trade, is that because they are so over leveraged, because you can take, you get those, dollar, you get a 150 yen to your dollar, right? But then you're margining that 150 yen, so you're 15 yen to your every dollar, or I'm sorry, 1500 yen to your every dollar, right? And then you're lending that money. So it's
Yeah.
that margin leverage, that multiplicative effect that makes changes in what is considered a very stable trade so dangerous.
Yeah, this
Because
comes back to like the whole idea of
now
your payments in
if you
yen,
lose
right?
$1, you owe 10.
Yeah. And this
So
comes back to like, so imagine this, right? Like, so to boil it down, like I borrow this yen at 0.5%, whatever, and I'm paying, we do the conversion rate and I'm paying X amount of dollars, right? But that X amount of dollars is entirely dependent on the conversion rate back to yen, right? When you're paying these payments in yen, right? Like, so that's the risk, right? Is
Yep.
that if the value of the yen goes up by, let's say, 30%, my payments on that loan I took from Japan have now gone up by a lot, right?
I mean,
especially if
So
with the
would it be fair to
multiplicative effect, it's
say, make
crazy.
sure
Yeah.
I'm understanding the mechanics here, would it be fair to say that the yields in Japan are skyrocketing because nobody's closing their yen shorts?
Yes.
Because
It's not really a short, but yeah.
Well, because the yields are matching where the yen should be, and the yen is still like, and so you're getting a very extreme spread between where yen is and where Japanese yields are,
Yeah.
because the bond market is anticipating that the yen will rise because these shorts will have to close. And then,
Yeah.
we've already discussed the fact that now that the bond market's doing that, it's kind of self-fulfilling.
Well,
Right?
it's
So those,
impossible to try to get the same trade again. It's way more difficult now, and the risk is way more apparent than it was.
Well, what I'm thinking is, because you have these yields in Japan that are skyrocketing, but the yen is still kind of staying flat to the dollar, which means nobody's repatriating money to Japan to buy these rising yields, which causes them to continue to skyrocket. So the question is at what point, where do the Japanese yields have to go to get people to actually buy the paper?
Well, you're the numbers we're talking in, like This isn't like mom and pop going, you know what? I'm
I
going to get
understand
some
that.
yen. You know?
I understand
Like this
that,
is so
but
this is a
why
question of
isn't it
maturity
attractive?
and rolling.
And
Like
when does it be? I'm asking the question: when does it become attractive?
When it forces Japan has the largest domestic savings of any country in the world, like per capita. They save all their money basically, and they use this money to buy U.S. bonds. And Japanese corporations buy U.S. bonds because they receive a yield on those treasuries, and so because of that effect, Japan and not only the population but the corporations and their banking institutions, they own the largest number of in circulation U.S. treasuries at any given point in time. Currently, that's about $1.2 trillion. And that money is going to repatriate as their domestic bonds become more attractive. So the cost to carry on those bonds is the reverse of that spread, right? But then against the U.S. yield on for the Japanese. This is how it works. And so they have a positive carry on foreign bonds right now. And
so
this
the
is
upper limit is our rates. That's what you're saying.
And this is the basis of the carry, like why the carry trade exists, why it functions. This idea that Japan will continue to invest in UST, and the US can kind of use Japan's massive financial system, which is probably larger than any other country outside of the US, in order to continue to drive the velocity of the money supply, promote growth, and leverage lending. And we're not talking just 1.2 trillion. That's the amount of money that could just immediately repatriate from US treasuries back into Japanese bonds should the yield on Japanese bonds become positive relative to owning US bonds. So if you're in Japan and you're taking your domestic currency and buying domestic bonds, once that has a positive carry and the US has a negative carry, which is as that spread closes, then there's no valid reason and no possible reason to keep your money in the US anymore. And so you're talking at that base level, 1.2.
Could you argue that Japan's debt to GDP is larger than ours, and so
But there's still a
the
stable
risk is
economy.
higher?
Sure.
For now.
Yeah. So their yields should theoretically be significantly higher than their rate,
this is
obviously.
So you could even still have that's what I'm saying is you could have a situation where you get to parity with the US bond, and then it's still people are like, I'm not going to go all the way back because there's more risk on the debt side. So I want more yield if I'm going to go back. So maybe there's a premium there.
There might be there probably is some premium there for sure, but like what I think what Gherk is necessarily saying too is that it has much broader reaching implications than just money markets and these returns on these bonds. This comes down to things like competitive pricing on debt in America, where we've relied on that spread to give us a competitive advantage domestically. Like that goes away.
Yeah, I mean, if you're a U.S. bank and you're buying
feedback.
USTs and getting 5% yield on those, and you're lending money out at 7%, you're making a 2% spread, which is just not even survivable against our current rate.
That's not
of
beating inflation.
Yeah.
Yeah.
So I mean, the only way to actually beat inflation right now is the carry trade, and so it's necessary. There's other carry trades; they tend to be smaller. They exist throughout the market, but if you start to take the entire financial sector's exposure to this, and you start to look at it as not only banking institutions, but all of these non-bank lenders that they've pumped money into in order to obfuscate risk from their balance sheets, and from where they, due to Basel and stuff, can't really reveal that risk. You're talking, near approaching $100 trillion in financial assets that are tied inherently to this trade.
Mortgages.
And
So
it
many
just
mortgages.
takes that first $1.2 trillion to start to force the rollover of all of it.
Yeah, I can see a vicious feedback cycle kind of forming in my mind.
And so what you're seeing is you're seeing Japanese bonds appreciate at the rate that yen is expected to appreciate, because as this starts to unwind, the yen is going to go up in value. And so you actually don't want the US exposure. You want the exposure to the yen in that scenario, because the yen is underpriced to the dollar right now. It's $1 to 150 yen, which is a great deal.
Oh, wait, hold on. Is it actually down to 150, or are you just rounding down?
I think I'm rounding down. It's 154 right now is the current exchange rate. And it was almost 160 last week.
Yeah.
So
yeah,
I mean,
last Friday. So this has been
That's crazy.
Yeah.
And so we're talking about an unwind that could drive the yen or the USD JPY to like 98 or more.
We could
even have a scenario where the yen is above the dollar because of all this leverage.
So just to put it in perspective too, for like our listeners, right? I mean, this comes down to something like this, okay? So, right now, right, you get a mortgage, you got solid credit, you're looking at around 6% or so, little with some wiggle room, depending on your down payment. If this whole thing collapses, right, banks are no longer able to underwrite a mortgage at those rates. Instead, they have to go back to the traditional financing structure where they have to use UST. It's borrow short, lend long. They have to basically go back to that, and they have to make a spread on that beats inflation, which, let's just say inflation is at 2.7%. Okay. So if I add 2.7% to, let's just say, the 10-year, you're looking at a 7% roughly mortgage rate, right? That's a 50 basis point increase in mortgage rates right there, just switching back to borrow short, lend long. I mean, that's assuming that there's no impacts to the actual UST market, because there's also distortions to the UST market from this whole trade. If the trade actually does equalize, I'm just going to say equalize instead of collapse, right? If it equalizes, you may see USTs even go up from there. And I mean, this was why, back in 2023, even, I was saying that mortgage rates are still really competitive and good, even though they are way worse than they were in 2021, where they were gobsmackingly cocaine-addled nutso. They were still pretty good. But like now, it's getting to the point where if this whole thing sort of, normalizes, you're looking at mortgage rates, and it's not just mortgage rates. I'm using it as an example, but you're looking at credit costs that are multiplied, right? They are, there's going to be just some insane growth in the cost of credit just by this trade not being able to lubricate debt through the whole system. It's all going to just become much more frictional.
I want to use this opportunity now to do a pivot to go forward to the next topic, because we're talking about cost of credit and the rates of sovereign entities. And we talk a lot about how federal governments create money, which debase the currency, but money's also created by banks, and right now banks are giving out a lot of money to pursue the AI build out, and those loans become money, right? And that money helps buy treasuries. And so that when people say like, "Oh, we have to grow our way out of this is kind of what they're talking about. They want real durable growth in the private sector from banks loaning money so that they can absorb the treasuries
Keyword
that are
durable.
Yeah, right. The keyword is durable, so that it can absorb the spending that is occurring. And right now we are enjoying the fact that, we're making basically, I say this a lot, probably people who who follow me are sick of it, but every year the U.S. federal government sells $2 trillion in treasuries and returns $1 trillion in interest, right? And so the difference must be made up by money growth in the private sector. And right now that's happening, but I think a lot of it is in the AI trade. And so if that starts to falter, then all of the things that we've been talking about in terms of interest rates and the like starts to unravel even faster. So then you start getting all of these things happening at once, with Japan's rates being strained, the US rates being strained, and especially with even more, with the geopolitical and the domestic uncertainty that we've been talking about, which are also, we didn't even talk about this tonight, but we could probably spend another half hour talking about it. But, you've got all these people coming out in the world and saying, we're going to sell off our U.S. treasuries and go elsewhere because of the increased, domestic and geopolitical risk, right? All of these things start coming together. So the one piece of the puzzle that we haven't been talking about that could turn this into a nice Santorum, if you will, of debt rates would be the AI trade. And this week we've got plenty of data coming up for the AI trade in the earnings. So what earnings are we looking at this week? There's a lot. I guess I'll start by just saying that, I mean, the big ones, the mags of the Mag 7, unless I'm missing one here because I'm going blind, but Microsoft, Meta, Tesla, Apple. Did I miss one?
Waste management.
Got it. Hey, someone's got to find where to put, millions of these AI chips at some point. That's the real.
Microsoft, Meta,
that's the
Apple,
the next layer of the AI trade is where do we throw it all away? Waste management is the penultimate AI trade. That's when it's clearly over. When waste management moons, when waste management moons, the AI trade is over.
I mean, yeah, I think you got it. Yeah, we got Mag 7. We got a few Mag 7 earnings in. I mean, IBM might be interesting, I guess. Texas Instruments might be interesting. We got more airlines though, honestly. Like I think the airlines are going to be more important for the economy. Right? You got American Airlines coming in, you got Ryanair coming in. Those should be interesting.
I mean,
Ryanair maybe more so than American, because I think business travel is fine.
I actually think the really interesting earnings for this week are going to be like Seagate, Texas Instruments, SanDisk, maybe ASML. Like I think all of the shovel makers, everything upstream of NVIDIA. I think that's where a lot of capital is going to start to flow. I actually don't expect the Mag 7 to do all that well.
Yeah, I
think they've worn out the cycle, and I think we're probably going to start moving to a period of time where capex is really starting to exceed free cash flows, and we're going to start seeing more debt utilization out of all of the Mag 7, and I don't think their balance sheets are going to look too great from this point forward, which is a significant blow to the AI, the whole AI narrative. And if you think we're at a bubble, it would be a big blow to that bubble if even 40% of the Mag 7 don't meet revenues as expected and aren't experiencing the growth that was projected back in 2024.
You're so he's saying that 3 out of 7. Like the amount of concentration we're talking about is mind blowing.
But 3 out of 7 of the Mag 7 is like fucking 12% of the S&P 500. And depending on which 3 it is, right?
And like 60% of the AI economy,
yeah. And so, I mean, I still think that the feeder industries are going to do really well, I think everything upstream. I think all of that capex and that revenue is being spent with ASML, with Texas Instruments, with Seagate, with SanDisk, as these data centers are built out. I don't know how IBM would do, but that one's kind of interesting. But I think those companies are going to do really, really well. But I think now, and I keep saying, like, I think a couple more earnings, and I think now this earnings session, I think this season is the one where we start to see some verifiable weakness in the Mag 7. Just the cyclicality of the chip industry. Like, this is I think where we see the pivot.
Yeah, I'll just provide a little bit more of my own perspective on the upstream side of NVIDIA. Because remember, everything on the upstream of NVIDIA making a shitload of money, or stands to make a shitload of money. A lot of it's still on paper. Everything downstream of NVIDIA loses more money than God ever thought possible.
But it's okay,
Um,
right? Because they're losing NVIDIA's money.
Right.
Well, yeah. Well, they're losing Nvidia's money, but Nvidia is just putting in enough money to continue to convince other people to put in some money. So there's a feedback loop there. There's an op amp kind of function there. But anyway, speaking of op amps, Texas Instruments is interesting because of they do a lot of analog devices, analog to digital devices, a lot of power management, a lot of sensors. So to me, whenever I hear Texas Instruments, I think more of like vanilla commodities, but also maybe more of like a robotics flavor. So Texas Instruments might link more with like the Tesla narrative, although, you know, the Optimus robot is such vaporware at this point that I don't know that you'll see anything there yet. But to me, Texas Instruments is just kind of interesting because they're a little bit more tied into the robotic side than just like the straight semi side, the straight AI software side. Seagate obviously is hard drives. Um, so Seagate actually their big bread and butter is disk drives for servers. So like big disks, which are nice because they're fairly fast, but they're more for like long term. I don't know. Seagate to me is kind of I think they'll do fine, but I don't know how stellar they're going to be. Just because they're not like right at the forefront there. Um, ASML, honestly, I couldn't tell you because that's so far upstream that everybody who needs an ASML instrument for the AI build out has already bought one.
Do you think so? Because I think TSMC is still not meeting NVIDIA's demands, and they probably need more lithography machines. And
Maybe. I
supposedly
mean,
they're expanding their, and then also Intel. Like, I mean, there's been rumors at least that both are expanding operations in Arizona.
yeah,
So,
but
I
my
mean,
question is, have they already bought all the stuff for the expansions that they're making in Arizona? Because remember, the CHIPS Act spurred a lot of this on, and the CHIPS Act is a few years old now. And you would think that one of the first things you would buy if you're planning a new fab in the US would be, we need litho machines. Let's get those orders into ASML, the monopoly on EUV.
oh,
Um,
here's something interesting about Texas Instruments that maybe we glossed over, by the way. They're responsible for the DC-DC regulator modules and the 12 volt to 48 volt rails for all of the like AI racks.
yeah, did I
And
say
then
power? Because
yeah,
it's analog, power, and robotic like
they also make
sensors.
all the NICs switches and accelerator cards, and then
I love
all the
NICs.
clock and timing cards.
NIC, by the way, guys, means network interface card. So that's like the thing you plug the Ethernet cable into, just for our viewers.
So that their uh, their catalog is pretty.
Yeah, they make a bunch of stuff. Like all the chips that do things that aren't compute, they make. Yeah. I'm looking, are there any other non-Mag 7 AI plays on this list? I don't think so. Not really. I mean, maybe Agilicis?
Probably that's where you get to like the like like the software earnings maybe and the cloud stuff.
Yeah, so I think Apple, I guess, was kind of interesting because they're gonna put in Google Gemini in, so they've kind of solidified their existing mob agreement they have with Google, right? Pay us $20 billion and we'll put Google as the default search, and we'll use your Gemini, whatever. I don't think anybody gives a shit about that, really, at least from the consumer perspective, right? I mean, nobody's buying AI anything. Why would they care if they put AI in another device that people don't want to pay for? If anything, that could spur people to try to buy the last year's model. But then they'll be pissed off because everything's going to have to go up in price because of the costs of all the hardware. So Apple's kind of an interesting one. I don't know what to think about that. The other thing about Apple is apparently like this Cloudbot. I don't know how to say it, but it's like this AI agent that people are trying to make a thing. But apparently, like a Silicon Valley thing is to go and buy a Mac Mini and like run your Cloudbot instance on it. So like there's
Claude?
people. Well, it's like CLAWD.
That's awful.
It's not like Anthropic Claude. It's Cloudbot. I don't know, but it's like it's an
I want to
open
meet the
source.
marketing genius in charge of naming that.
I don't know, but it's an open source AI agent like many other AI agents.
Open source with big quotes.
Yes. Yeah. It's basically kind of a wrapper. I guess the weird thing about it is like you interact with it through like WhatsApp or something. I don't know. It's very I haven't quite figured it out. But anyway, people are on social media of the San Francisco variety posting pictures of them buying Mac Minis. So this is like becoming a trend of like buying a bunch of Mac Minis and running agents on them or something. It'll be interesting to see if it shows up in their numbers at all. Otherwise, I mean, Apple's just Apple, right? They're going to grow a little bit every year.
A little bit less, though, I think,
Yeah,
because
sure.
not only have the price of smartphones gone up, but the amount of carrier coverage for the price of new phones has declined. So there's less subsidization from like T-Mobile, Verizon, AT&T. This makes it significantly harder to purchase new phones for most end users. And then
I don't know if that's going to hit right now, though. I think
no, but I think it's a drawn out effect that we've been seeing over their last several earnings calls, where just demand for their primary product is down, and now that primary product is starting to cost more, and it's been costing more over the last couple of quarters. So, I mean, I think there's a decent chance that we see sales on their mobile devices continue to drop.
Yeah,
maybe.
I think that is that. I mean, that would be quite interesting to see. But on Wednesday's our big day. So we have Microsoft, Meta, and Tesla. I want to get Tesla out of the way first because I feel like that's the easiest one to analyze. Their earnings will probably be dog shit, as they have been dog shit for quite a while. But also, we're going to get a ton of promises and hopium and securities fraud.
Self-driving cars, bro.
I'm sorry.
Fuck the robots. Let's
Sorry,
fuck
I was
them.
coughing. Their CEO, Elon Musk.
I have a
You will have
question.
self-driving
Do we
cars you can
have
bang
an
in
SEC
6
anymore?
months.
Do you think Elon Musk is going to be able to successfully
Yes.
by the end of next year, this earnings? Is this going to be the earnings that everyone's just like, maybe the end of next year isn't going to happen?
Is he going to launch AI robots into space to build AI data centers?
You can fuck them all. You can bang them. Yeah, absolutely.
In space.
In space.
You can bang them in space. Yeah.
You nailed it. That's what
my
AI's
question.
been missing.
My question about Tesla
Bangability?
earnings is:
In
did
space.
the Doge unit run by Elon Musk completely destroy what few people were still jerking off in the SEC offices every day? Because
No, it didn't do anything.
didn't he fired like hundreds of
He
thousands of
basically
people?
he told them to share Pornhub accounts, is what he said. You can't have 100 Pornhub accounts.
I see.
Just
So
have
he just got
one
the
and you
password,
share
like
it.
the SEC passwords for Pornhub.
Yeah, he was. Well, he found out who was subscribing, and he was like, "Look,
All of them.
we tracked your guys' desktop computers at your offices where you do your work, and we see you guys have 100 different Pornhub. Some of you have multiple Pornhub subscriptions. Why don't we all share them? Okay, you can use filtering and search
So you're
features.
saying
None
that
of you
they're
need them for more than 15 minutes a
intergovernmental
day.
Pornhub accounts
Yeah, exactly.
instead
I mean,
of
come on.
a single agency only Pornhub accounts. Hold
Nonprofits have
on.
already been on this
I
for
would
months.
Does
love to
Pornhub
see
know about this? Can we get their CEO on to talk about their terms of service?
Hold on. Did they send this contract out to bid?
I haven't heard anything about the SEC since Gary Gensler.
Because you've got, you've got
their
like
statement of work for the Pornhub.
There's like 9, but there's like 9 providers that could probably competitively bid on that contract.
That's true. Yeah, for the content they need for their business operations.
I would be concerned if they didn't send it out for a competitive bid. That is just government waste.
That is, you're right. Yeah, it could also be seen as cronyism too.
Sorry, Gherk is like dying inside because we cut him off to
I'm
talk about.
I'm not. No. I'm just legitimately thinking that under this administration there is no more Securities and Exchange Commission. Because
there hasn't been since like
it.
2007.
I'm pretty
Most
sure
people, I think, still think Gary
I haven't
Gensler
heard
is
anything. I figured they would be used as a tool to attack anybody not sufficiently bribing the administration, and I'm not even seeing them do that. So my assumption is that they're just gone.
They've been gone, dude. They've been gone for
Gary Gensler. 4 years ago, Gary Gensler had only been in office for 15 weeks. Okay? Calm down. And then he served.
Yeah, and then he posted a video of a dude buying meme stocks and getting a pie slammed in his face.
And at some point, we were going to deregulate crypto or regulate crypto or centralize. That's what we were going to do. We were going to centralize all the decentralized currencies and make them real attractive.
strategically
be your own bank, bro. That's the U.S. being their own bank.
We were going to debank the decentralized networks
into a bank,
into our bank by banking them.
I hate you so much.
Dude, all the crypto maxis just left. All right, I'm glad we got them out of here.
We've never had any cryptos maxis watch us. Let's be honest.
Hold on. All right. So does anybody think what's going on with Tesla? You think he's gonna? It's just more hope.
He's just gonna blow smoke up a bunch of investors' asses, and they're either gonna believe him or not.
Continue.
I don't know. What's Tesla trading at? That'll tell you if it's gonna go up or down.
It's rich. Ooh. Let me tell you.
It's at like 450 down.
Always rich.
Tesla down.
No. Okay. Why use prices when you could use price to earnings? Okay.
No.
What's that?
Its price is still lower than its price to earnings, and because of that, I think up.
Wait, no, hold on. Its price to earnings is only 300x.
That's what I mean. If the PE is below the actual notional price, it needs to have the notional price match its PE.
So it has to come down $150.
It has to go up $150.
No, because it's trading at 450. The PE is 300x.
Sorry. No, its earnings have to go down.
I see.
By 75%.
Dork, here's what you're fundamentally misunderstanding here with Tesla is that pretty soon that PE ratio is going to go to infinity, and then it's going to invert to negative, and people are just going to leave it off and put a little dash there from the PE ratio.
Could they just put
then they become a pre-earnings play, a long-term
You mean post-earnings?
Pre-post earnings play, long-term speculation on their long-term bet on building a robot to sell to moms to watch their babies, which I can't think of a funnier thing for Elon Musk to push at Davos than who isn't going to want to buy a robot to watch their child. Has he ever met a mom? Which is funny because he has a bunch of moms.
Yeah, but he hasn't met them.
That he's artificially inseminated.
Yeah,
and he clearly has never spent any time at all with them raising their kids together, because if anybody who has spent more than 5 minutes with a mom knows that none of that, like, it is against their visceral nature to put their baby anywhere close to a robot. You might as well just
you don't want a robot to rip your kid in half?
You might as well just say, like, oh, you have to go to work, drive to Chuck E. Cheese, give Chuck E. Cheese to the Five Nights at Freddy's animatronic, and the robot will take care of your baby. Like, it is the most insane thing.
This is what's going to happen. You're gonna leave the robot to change your baby's diaper. Then you're going to go into your kitchen and ask Gemini how to spatchcock a chicken, and you're going to come back to a spatchcocked baby.
Then you're going to say, robot, you shouldn't have spatchcocked my baby, and it will say, oh, you're absolutely right.
Good catch.
Good catch.
Good catch.
And you'll feel great because your AI psychosis is now fully embedded.
Oh yeah, your baby's dead, but at least you're a genius.
Yeah, we're and you only paid Elon Musk $50,000 for the privilege of having a humanoid robot that just does things worse than a robot could.
You know what's even weirder is, like, they're not going to solve general intelligence. And so those robots are going to be secretly teleoperated. So there's going to be some creepy dude
in a bathtub,
obviously doing computing in a he's figured out how to safely compute in a bathtub. Like changing your baby for you, and you think it's a robot. I don't see how this is going to work. Anyway, all right, let's move on.
Where do you plug the big cable in that goes to the remote control? And do you just keep that guy in your closet?
No, it's all in India, dude. You got a guy in a bathtub in India controlling the robot with one hand.
Wi-Fi.
Other hand, we don't know what that's doing, but like he's changing the baby in the bathtub.
There's two joysticks.
Okay, seriously, if there's a job in India where you get to control people's fucking Tesla robots that are inside their houses, I'm moving to India and applying for that job. And I am going to fuck with people so much.
Dude, you say that like it's a joke, but there are currently jobs now in India where you can get paid to sit there on video folding laundry to train robots to fold towels.
I'm going to welcome people's guests into their home by flicking the dick tip of their guests.
You could probably make
the remote robotic figure.
I bet you could fold. I bet if you folded like 10,000 towels a month, you could probably make like $800.
Here's what I propose: we take all the money all of us have combined, we short Tesla, move to India, get jobs operating Tesla robots. Crash
At first, I was like, one does not simply short Tesla, but then I realized the next part of it was sabotage.
Who do you think?
Oh,
who do you think
man.
out of the three of us can handle the spatchcocking of the baby?
Ooh.
I think
J-Fresh.
George's the most
J-Fresh got the most
positive.
experience with kids. He
He's
can
the
get them to
least
trust
likely
the
to suffer
robot.
from PTSD.
That's true. I'm the youngest. I have the most plastic brain. So you just give me to play Tetris
Wait,
while I
that
do
would
it.
be that would be bad, right? We don't want him to do it.
We want you have the most experience with kids, so you'll be
I'll
able
do it.
to like get them
I'll
to
do it.
trust the robot
You've been
before you
waiting
But only
years.
spatchcock them.
but only for a lot of money. That's what'll make it okay.
You'd
all
make
right,
100% on our $10 that we short Tesla with. Okay.
Anyway, let's move on to Meta. What's going on there? Obviously, they're going to keep. They've got.
I'm assuming Mark Zuckerberg's going to spend more money than he told people he was going to spend.
He likes
Yeah.
to do that a lot. He loves doing that.
That's what happens in every Meta earnings.
Well,
It's his
what's
favorite
really
thing.
interesting. What's really interesting with Meta, which I do not understand. I mean, yes, they make a bunch of money, and yes, 10% of that money is actual fraud that they know about and then amplify and charge more for because of the risk of allowing people to defraud their users. But let's put all that aside, that they make a shitload of money, some of which from fraud. What is their plan? Because they're already, finally cutting Metaverse Labs. What is their lab called? I don't know what they call it.
You mean the thing that they went
lab.
and actually changed their entire ticker name to actually exemplify?
But the metaverse effort they're cutting some of. But even like over the last few months, they were pushing so hard into making llama a thing.
So
right?
you're saying I shouldn't have
billions.
gotten a 6% loan on my $400,000 house in the metaverse?
Why didn't you?
I was going to live there.
You already do.
No, that's what Elon believes.
Let me finish
fuck.
my rant. That was funny. But he moved into AI, spending billions of dollars. Kind of nobody cared about llama, and maybe that made him a little sad. So he just started going and buying all the talent, pushing AI's, meta AI, right? And now we're hearing that they're trying to transition now into compute. They want to be a neocloud, or I guess, I don't know.
Well, have you ever considered that Mark Zuckerberg wants to bathe his lizard skin in chip coolant?
Mm.
And this was the most expeditious route to producing a
Jesus
facility
Christ.
in which he could do that.
Okay, I think like
who follows this arc and says I need to buy more Meta?
Idiots.
People who bought it at $70 and are afraid to sell it.
Idiots.
No, those people
This
were
would be
smart.
a great time to sell it.
I definitely should have bought Meta when it was like $70. Some would argue that the best time to sell it was in August, which is maybe when a bunch of people sold it.
Maybe. I honestly, with the whole Meta thing though, like, I mean, Zuckerberg, he's in the world of multi-trillion-dollar companies, he's kind of a young gun, right? He's a little fast and loose, right, with how he runs his company. He's just chasing trends, right? I mean, that's all I've seen. The metaverse thing was all just hype off of NFTs and crypto. AI, obviously, he's just chasing off of that, getting a ton of financing to do it. And the thing is that if we're going by, historical precedent with Meta, the thing they make money on is ads. They don't make money on the metaverse. They never did. Okay.
Well, ads for fraud.
Yes. Okay. So they make money on ads, and they always have, and they always will. As a company, right? Do you think AutoZone pivoted to selling cars or selling windshields, right? Or being a mechanic? right? No. But Zuckerberg has this idea that Meta is going to pivot to be this company that is so much larger than a giant ad machine. And he has been wrong massively the first time. The second time, it still remains to be seen. But I think what we're going to see from Meta earnings is that he's not entirely correct that this pivot has been successful.
Or
So
what he's
basically
gonna-
flat.
What his plan? When do people start asking him, "What's your plan, dude?"
That doesn't matter. His plan is the same as everybody else's plan. What do you think Satya Nadella's plan is? What do you think that Google's
Well, that's
plan
what I
is
want
with
to get
AI?
into next. Well, I've saved Microsoft for last for a reason.
I want to say
Okay.
something
Is he going to
about
murder
Mark
Sam Altman
Zuckerberg.
live on the earnings call?
I want to say something about
This
Mark
is the sound of
Zuckerberg.
Sam
First of
dying.
all, that I've said before, he hasn't had an original idea since he stole his first original idea.
Yep.
And I think Monty Python best captured the essence of Meta as a corporation. And I quote, "When I first came here, this was all a swamp. Everyone said I was daft to build a castle on a swamp, but I built it all the same just to show them. It sank into the swamp. So I built a second one. That sank into the swamp. So I built a third. That burned down, fell over, and then sank into the swamp. But the fourth one stayed up. And that's what you're going to get, lad. The strongest castle in all of England."
Holy shit.
You're right. This Meta's a classic case of good. So, like I said,
I think
ad
we should
revenue.
Just end the episode right there.
So to distill it, ad revenue, chasing AI, good money, chasing after bad, right? Like,
Yeah. That's what the quote. Yes.
I could
Thanks
have
for
been more
explaining the
obvious,
quote.
Dork. Thank you for explaining the joke.
No.
Sometimes I think I'm the autistic one, and then you pipe in.
All right.
I just
Microsoft
understand our viewers.
Here's all the only thing I want to ask about Microsoft, and we'll move on. Are they going to blink?
Hmm.
No, not for earnings. Fuck
You
no.
think they may mention the thousands upon thousands of chips they can't power?
Right. They're already sitting. Everybody's secretly sitting on all these Blackwells that they can't plug in. Everything, hardware always takes longer, right? Infrastructure always takes longer than you expect, and they're hitting that wall.
Well, you have a bunch of
Are they going to
companies
signal,
investing
hey, I
in
maybe
AI
don't need to-
factories that have never been industrial companies.
I was like, hey, maybe I don't need to buy Vera Rubins because I haven't plugged in my Blackwells yet.
Well, hold
Shut
on.
up, JFresh. Quit being a fucking buzzkill.
Hold on.
here.
I don't know if you
Okay.
know this, but if you play COD4 on a Vera Rubin, you'll get 30 more frames per second in 4K.
It's true. Nothing gets my rocks off like Call of Duty 4 on a Vera Rubin.
I don't even know what to say to that. Sure. Cool. That's cool.
I mean,
cool.
I'm getting an entire rack of GPUs
Jensen's
in my
doing what he
room.
did with crypto miners, and he's doing what he did with gamers, right? But now he's trying to pitch this shit to corporations. Except gamers will actually go out and upgrade their video card every year horizontally, but mega corporations probably aren't going to buy into that same
They have
track.
bean counters. They actually care about the money they spend.
Yeah.
At least to
Well,
some degree.
At some point.
Yeah.
Here's my next question when I ask about Microsoft. The last time they had earnings, they gave enough of a hint about revenue share from OpenAI that allowed people to back out how little money OpenAI makes versus how much they spend. Do you think we get such a juicy data point here?
I'm
What if
actually
we find
curious about the
out
questions that are
that
asked
Sam
about
Altman's
that.
been running around like a chicken with his head cut off in Saudi Arabia, trying to milk every oil baron he can for every last drop of money that he can grift out of them because Microsoft cut his ass off.
Yeah, literally 2 weeks after he finally closed the $22 billion from SoftBank. He's out in Saudi Arabia asking for $50 billion.
This reminds me
Did
of a
they give
lot
it to
is
him? Or did they make him
nobody
do
knows.
things for it, like those girls
We
from
just
Instagram?
heard. We just got the hints that he's out. He's on the loose. He's looking for that next round, and he, I guess, seeded the media, and the media just said, "Oh, yay, something to write about. 50 billion. That number's even bigger than
Hey.
the last one."
Hey, Dork.
This reminds me of his Theranos. All right, it sounds a lot like Theranos.
Remember what you were
okay?
saying earlier about your prison butt?
Yeah, it's very sweet and very nice. By the way,
could you go raise us some money
take
in
note,
Saudi
ice
Arabia?
guards. Maybe I could.
All right, cool.
We're
I
both
mean-
going to end up in the same jail with Sam Altman, and we're going to get the Requiem for a Dream.
I mean, I bet his
between Sam
his
Altman and Gherk.
little jail pocket thing probably way nicer than mine. All right, so if I'm in the same jail cell as him, I'm gonna be pissed. I'm probably gonna murder him.
You've thought a lot about this, huh? You've been thinking about.
I'm
Sam
a
Altman a lot?
pragmatic person. I'm shrewd. What can I say? I've got a
Well,
shrewd
it's not
booty.
going to let
What
anyone
analysis
step on
did you
his
do to come to
on
this
his-
conclusion?
prison pimping himself game.
What analysis did you come to this? You know what? I don't even want to go.
Just look at his cute little eyes, dude. Those are so attractive compared to mine.
Okay.
Okay.
Sure.
Yeah.
Okay. Yep.
His innocent face, like he hasn't faced adversity like I have, and so yeah. Anyways,
Yeah, I would like to move on. I would like to dig no deeper.
We've
Calendar,
clearly
let's
touched on something here.
We're touching something.
Yeah.
we're starting to get into my trade secrets here, so I'm going to stop talking.
All right, calendar.
Boring
Stuff.
FOMC
right?
interest rate decision.
FOMC not going to do anything, right? However, I
You
will
think
say we're now moving because the FOMC is not like we're not going to get a rate decision out of them for a little while, probably. I will say that the narrative from the presser is going to be more important, and this is the first narrative since the DOJ press charges against Powell, and I expect him to come out feeling spicy. I don't think he's going to change the color of his tie, but I think he's going to be fielding some interesting questions about the independence of the Fed, which I think is far more important than any rate decision or anything going on. I would like to see if they pump more liquidity into the front end, though.
Can I just say, I think you should go with a green tie. Green for money.
I think you should go with a blue tie.
That's bold.
I wonder if you could get a tie with ice cubes on it. I'm going to send him one.
All right, so let's see. We got anything else? Core PPI. Oh, okay. It's a delayed report, though.
It's December, isn't it? I thought
It's
we were getting
December.
December PPI slightly late,
Well,
but on time.
Okay.
Ish.
Yeah. So Friday, we're getting PPI. That'll be interesting.
It will be.
anything
Median
else?
forecast is up.
We're getting U.S. productivity revised. Like that number matters anymore.
What if they revise it to nothing?
Honesty? I doubt it. All right. Ron, play your shit.
That's fucking get the goddamn.
Fall Stars is a GammaStrike podcast. At GammaStrike, we work to present options data and market maker positioning in easy to understand and actionable formats to inform your trading decisions. Learn more at gammastrike.com.
Jesus Christ.
All right, Dork, plug our socials and take us home.
Yeah. So if you guys don't know, post links all over the place and all of our shit where you can go and ask questions. We post before we start these podcasts. Just go on the post, reply, ask your question there. We got an anonymized forum on any of the streaming platforms. But yeah, go give our socials a follow, and you'll see when we're recording these. Pop in and ask your question there, and we'll get to it if time allows, and if we don't already cover it in our whole process. So yeah, with that, we got a question. Hopefully, so we got a question from Reddit about the U.S. government shutdown along with BOJ. We pretty much covered that in the first part of this whole episode. If there was anything we missed that you would like more elaboration on, please, in a follow-up on our next episode, ask us, and we will get to it because it's a really good topic. Then we have another question. This one is also about BOJ. Sheesh, we got a lot of BOJ questions. Okay. How about this one? Can you give a visual representation of hedging flows and why in certain situations market maker flows stabilize the market and in others exacerbate directional volatility? I think that's one that we could probably touch on.
Yeah, I mean, well, this is obviously not like a visual format. Right? It's a podcast. I know we do have a video of the podcast, but I think I can just explain it without any visualization. When you're in a negative gamma environment, you have the market maker buying the uptick and selling the downtick, which increases realized volatility and extends directional price movement. So basically, the market maker, any price movement, the market maker is then jumping on, which then drives the price higher, which drives more market maker activity in that direction. You get increased volatility because of this, because the directional moves are larger. Realized volatility is higher because of that market maker flow moving price up and down more than it would otherwise. And in a positive gamma environment, the market maker is selling the uptick, buying the downtick. So that prevents price from going up too fast, and it prevents price from falling. And then you get, these are very stabilizing flows that help to keep price action contained in narrower channels. It kind of makes price action grindier, and realized volatility declines.
Yeah. I'm trying to pull up a good stock chart that kind of exemplifies this. If you use our product, app.gammastrike.com, you can actually go and, so a good one I think is, I'm looking at the Microsoft chart. Okay. So it's a good one because there's a lot of price trend at Gamma Max that, while it is trending on Gamma Max, you get this sort of like really stable sort of movement where you're not having a lot of big intraday swings or anything. And then you see as it pulls away from Gamma Max, you start to see those moves start to become more and more pronounced, right? So, and I shared a chart in our channel, so our shitty producer can potentially throw it in.
And a good thing to look at on these charts is, gamma neutral is the point at which it's telling you at that point in time, assuming we're looking at a historical chart, whether the market maker's exposure to gamma was negative or positive.
Yeah. So,
yeah, and I think I talked with this person online when they asked the question, just provided them a couple visuals maybe to help. The thing of it is, when you look at the gamma curve, it is the summation of all of the different positions, and each position is a is a normal distribution, right? It's a Gaussian. And so you can kind of think of, for any folks who have done like Gaussian decomposition of a curve, you can basically
oh yeah, that's
fit
everybody.
everybody, right? You can fit a curve by the sum of a bunch of different Gaussians. So go look it up. Go look up like Gaussian fitting of a curve, and you'll just see a bunch of Gaussians that add up to the curve. And that's what we're doing. So you're taking all the positions that exist that are open, and you sum up all of the gamma in total.
Yeah. So that's, so in certain situations, right, where gamma is really high, market maker sensitivity to gamma or to changes in delta are also really high, right? So you get this hedging activity that is very much so like reactive. So in that chart I shared, even you could see where Microsoft opened above Gamma Max, right? And then just was hedged right back down to Gamma Max. This is, an exact sort of situation where you see the stabilizing force in action. And then in the very same chart, right, as Microsoft is approaching gamma neutral, you see these multiple times, you see these reactions where, you get these movements back up into sort of a more positive range, right? Instead of this gamma neutral range where the market maker sensitivity is much, much lower, right? And if you go below gamma neutral, then the market maker sensitivity becomes inverse, where it is no longer buying into these falling prices and selling into rising prices. You get the opposite effect. And that's a spot where generally, especially with impactful equities and with indexes and stuff, you don't really want to be there as a market in general, because it means that there's a lot of amplifying effect, especially with changes in sentiment, things like that. So, yeah, I that's a good question though, but I hope that sort of explains it.
We'll see. Yeah, make
I
it a
guess-
conversation.
I guess
Read the
one
docs
one
too.
more
I
way to
try
think
go
about
through
it
in the
is
docs.
that in highly positive gamma environments, the market maker strives to suppress realized volatility. And in highly negative gamma environments, the market maker drives realized volatility.
Yeah, that's a great way to put it. Yeah.
I'm excited
So
about this next question.
yeah, so someone asked if we could touch on core 1 month. Somebody at some other data provider says that when it falls below 8, it's a warning of increased volatility, and they say they believe a sell-off. They just want to get our thoughts on that. Low core 1 month. So core 1 month, right? What is that? And I mean, when it falls below 8, what does it mean? I think it's a good question.
Okay. Let me create a hypothetical to maybe make it really clear what core 1 month is. Suppose you have an index, and that index has 3 stocks. The first stock over 1 month goes up 30%. The second stock over 1 month goes down 30%. The third stock is flat. What is the correlation between the index and those stocks?
Hi.
No, the correlation is very low because the index ended up being flat, right?
Yeah. Okay.
But one third of the components in the index went straight up, and the other third of the components in that index went straight down.
Yeah, I guess.
So the correlation is very low, right? And so basically what low correlation tells you is that let's suppose you're in an environment like we're in now where everybody's just zero DTE selling, just shorting the hell out of index vol. So the index wants to be flat. But all of the individual stocks want to pick a direction, right? So like right now it seems pretty clear that people are rotating out of Apple and into other very large stocks. So Apple's going down and the index wants to be flat. So what does everything else have to do? They have to go up, right? And so in those situations where you tend to be dominated by short vol on the index, you're going to get low correlation simply because whatever choices people aren't making, whatever impactful choices people aren't making on the individual stocks, all the other ones have to move in such a way to make the index stay flat. And so when you have a low correlation environment, basically what it's another way of just saying that people are really short volatility on the index.
Yeah, I mean, I guess something a lot of people forget about the CBOE index is like core 1 month and 3 month is these are not a correlation of the 500 stocks represented in the S&P 500, despite them being S&P 500 correlation measures. They're actually the top 50 value weighted SPX stocks. So they are the top 50 weighted by value of the S&P 500, and that those are being the performance of those is being measured against the performance of the index. Generally, I don't use correlation as a signal. But I do think it's important for measuring the amount of dispersion that you see in any given time in the market. And this being index dispersion, where people, like Jay Fresh said, short volatility on the index and they're long volatility in the underlying components of that index. And this is something that you see, that it's a very large trade. It drives bull markets, because and what that does is this correlation declines and they become less and less correlated. It's telling you that index volatility is cheap or underpriced or artificially cheap, because of that short index vol that is the earmark of the long equity vol dispersion. And so generally you see correlations fall kind of seasonally, because you have every quarter you have an earnings period where the largest stocks in the index report roughly around the same time. And so you get a big spike in implied volatilities for those most anticipated earnings. And that has a effect of pushing down artificially in index volatility. And so having a correlation sub 8, yes, it usually does break down, but it's not breaking down because correlation is sub 8. It's breaking down because volatility, like going long vol or buying downside protection or downside convexity, is now substantially cheaper than it is normally. And not always, but sometimes that means that it is likely that volatility needs to price up. And what you can get is post earnings, that volatility can move up as equity volatility crushes post earnings. And so you actually have a very real mechanical effect that is presented there that has absolutely nothing to do with the measure of that correlation, and everything to do with the effect of pricing up volatility into earnings relative to pricing down volatility on the index, and then that trade specifically inverting as volatility crushes out of those single name stocks.
Yeah, I'll say, just to try to make it super easy for people, right? So when the index is flat and vol is low, and all of your other stocks are just kind of flopping up and down and out of sync with each other, so your correlation's really low. Yeah, you're going to get really low correlation, which corresponds with low volatility. Then everybody wants to buy more volatility, which then itself is almost like a self-fulfilling prophecy, which kind of drives the market to go down, which causes general sell-offs in index type products, which makes everything go down together, which drives up correlation, right? Because if everything's going down together, correlation is 100, right? But if you're not trading dispersion, you're not getting any information from the correlation that you're not already getting just from volatility from IB. Right?
And if you are trading dispersion, you're making your own correlation metrics.
Right. Yeah. By the time you're actually trading dispersion, you're not asking people on a podcast this question. Right. So for the average retail investor, you can completely ignore the syndicate. In my opinion, you can completely ignore it.
I actually disagree. I think as the average retail investor, this is one of the few mechanical places in the market where there's alpha. I just think that the other data provider referenced has explained what is happening incorrectly. I mean, market mechanic alpha is probably the easiest to capture. So if you know that some number of highly anticipated earnings are going to see volatility, implied volatilities crush, then there is money to be made, even as a small trader, on volatility crushing in those single name equities and volatility expanding in the index. As long as you don't have a situation where every earnings across X number of earnings resolves exactly the same way with a volatility increase, then you will make money. And the broader your basket, the better your chances of harvesting a yield from that trade.
Okay.
So okay, we'll caveat that very sophisticated small investor.
Yeah, small investor with a sharp mind. Yeah, okay.
I mean,
That makes
the thing
sense.
is I think the thing that a lot of people mistake here is that somehow you need to play the realized vol crush into earnings and predict it. And the reality is there's plenty of vol left over post earnings to where that increasing correlation could be captured. And on, risk adjusted positioning too. So like I don't even think you need to be that complex. Like it's really one of the simplest plays the market has to offer, which is why it's so big.
Yeah, but a lot of people that are playing correlation are playing, their earnings is a risk to be hedged, right? And that's where the retail trader can kind of come in and basically sell them that hedge that they're going to buy that they hope they don't need, right? It's kind of the same as like shorting puts on the index,
Yeah.
Similar.
It's going to blow, it's going to blow up every once in a while, blow up big. But for a while, you can sell the insurance.
I mean,
Yeah.
something I really frequently do, I guess, to get more into the specifics of it, is like I'll buy like put spread. Well, puts correlation's low, so put spreads are cheap, or I'll just buy puts on the index, and then I'll sell like or buy, I guess, a debit like iron condors on single name equities, because like all I'm saying about the equity is it's not gonna like, well, I'll buy or sell depending on what I think, but like I'm just saying the equity is not going to be where it is, right? I'm just like the price will move or the price won't move, and then I'm saying if the price doesn't move, the index is going to come down.
Yeah.
So
Makes sense.
it's a good way to capture earnings being like as expected.
I'm sure we will have many more discussions about dispersion and correlation now that we've brought it up here. So
Oh yeah.
I think we'll just leave it there for this week.
Yeah.
Ron wants to go to bed.
Yeah. Our last question, also USD JPY carry trade, fun stuff.
Skip it.
If we
No,
this is on
good
Blue
question,
Sky.
but we talked a lot about
Yeah,
it.
yeah. Just pop it in. If we didn't answer, like I said, we didn't answer anything that you were wondering about, get more specific with us on your question, and we'll try to get to it. So with that, I think it's time to move on to my favorite segment, which is stupid bets. Stupid bets. Who's gonna win? Who's gonna lose? All right. So Ron says that Gherk won on our Peace Security Council membership bet, because he said he cast a wide net with Nigeria, Indonesia, Russia, India, Philippines, and Thailand. However, I want to say that I got Hungary, and Hungary is, or I got Belarus. Sorry, Belarus.
Belarus
Yeah,
was directly invited.
Yeah.
Wait, who? Well,
Fuck you,
hold on.
Gherk.
Who
The
You win.
letter I
was
read
invited?
you was to the president of Belarus. It was a given.
Who was invited?
Yeah, so I
Somebody
win.
Tell me. I'm not looking this up. I don't even know who was invited.
Apparently, everyone besides Canada, because Canada was invited, but then they had their invitation revoked.
Where is this? Who joined?
Everybody not allowed in the UN. So it's like an axis of evil. And the US, because we're good guys.
Oh wow, a lot of people. This is like the Animaniac song. Argentina, Armenia, Azerbaijan, Bahrain.
I'm just
Bulgaria,
looking for the names
Hungary,
that Gherk
Indonesia,
said, and I only see one.
Jordan, Kazakhstan, Kosovo, Mongolia, Morocco, Pakistan, Paraguay, Qatar, Saudi Arabia, Turkey, United Arab Emirates, The United States joined. That's good. What was the one we didn't join?
Are we going to be
Wasn't
paying
there
$1 billion for our membership? And then if we are, who gets the money?
Trump.
Trump.
Uzbekistan, Albania. The following states have stated they intend to accept Donald Trump's invitation. So Belarus actually has not officially joined yet.
Yeah, Gherk wins because of
Get wrecked.
Indonesia. Yeah. Fuck
I
you,
tricked
Gherk.
you.
Wait, so you basically just won because you said Indonesia?
Yes.
And wait, Russia joined. I thought
Did
they
they?
did last week.
Well,
I
it
thought
doesn't
they
matter
agreed.
because, I mean, Belarus is still on the fence, so you fucking win. Fuck you.
All right, yeah, I got
Eat
one.
my ass.
Russia has not signed the charter.
Isn't Indonesia like the most corrupt country in the world?
It was at one point. I don't know if it is now. I think we looked it up last
It's
week.
about to be
I don't know.
again.
But,
Well,
okay. So, Gherk, you
North
win.
Korea would love to sign up, but they can't pay the membership fee.
Yeah, and they can't. They don't have internet, so.
All right.
I thought they could just
So what
steal
are
some
we-
Bitcoin.
Can we just follow up on this, Ron, to see if signed the charter means that they paid the money?
Did they pay it in crypto? In Trump coin? Okay. This week, stupid bets. What are you guys thinking?
Oh god,
We got
there's
some
so much.
earnings.
I want to say J-Pow changes the color of his tie. He's been
To
rocking
what?
purple for too
Oh,
many
shit.
years.
What color?
Shit.
Purple to, I'm saying blue.
Fuck, I already bastard.
Fuck
you.
you.
Fuck you.
I had to get ahead of you on that one. Blue.
Red.
Oh shit. No way. No way he goes red.
No way he picks a market color?
No way he picks.
What if he makes
no-
what if he makes his statement that he's a real Reagan Republican?
Oh shit. Okay. Fuck you. That might actually be right.
You know what color I'm going to pick, don't
Does the
you?
S&P 500 drop 3% if J-Pow walks out in a red tie?
Yes. It does.
Awesome.
Do you know what color I'm going to pick, right?
Green.
Purple.
Purple. Either purple or a Japan flag to signal that he is
Just full on.
He's gonna
Oh my
announce
God.
the rollover of U.S. Treasury bonds into the yen.
Just a white tie with a red circle on it.
Yeah. I'm going to go with purple.
Okay.
That's just the
All
same
right.
color. All right, fine.
Right.
Yeah, he's going
Exactly.
unchanged.
He's going unchanged.
He's going the low
He's
risk
gonna-
route.
He's going to bend over. He's going to talk his little game. And he's going to bend the knee just like everybody
I'm
else.
talking about the CEO of the
Spy?
S&P 500. You shut your mouth.
You mean Spy. He's the CEO of Spy.
Panikins beware. Jerome Powell is not your savior. He is your enemy. He always has been.
You're really
Oh,
hung
yeah.
up on this get rid of the Fed thing. Do you want us to end up with stable coins?
That's how
No,
we end up
actually,
with stable coins.
That's how we end up
I'm-
with stable coins, Jay Fresh. You want those to be our prime buyers?
I don't know what I want.
Mm. You should think
Jesus
about that
Christ.
before you have to pay for your next milkshake with Cardano.
Was that back over 130 yet? I think that's where I got out of most of it a long time ago. What's Cardano trading at?
Nobody
35
gives a
cents.
shit.
Oh God.
I'm gonna
Christ.
start building a carry trade on Cardano.
No, you're not. You like your money too much.
I know.
Fuck it. All right. Yeah. So you got that, Ron. Red tie for Gherk, blue tie for Dork, and purple tie for J Fresh. All right. Cool. Well then, you know what? It's fucking 2 hours and 10 minutes. Why don't we wrap this shit up? He's probably going to interrupt me with
Thank
this
you for
fucking.
listening to Volstars, a GammaStrike production.
3 hours next week. Get
Please
ready.
be sure to subscribe and check out our website at app.gammastrike.com.